Hello, everyone. It is Wednesday, the 22nd of March. And yes, indeed, you will have to deal with me again today. It's the Fed day today. What does that mean? What happened? How did the markets respond? And what are the charts telling us? We'll be looking at all of that. And we'll be talking to Bob Lang today, the president of Explosive Options. And I should make this like boom signal. Ladies and gentlemen, this is the final bar. Hello, everyone. My name is Julius de Kempenaer, and I am your host for today here at the Final Bar, presenting to you from Amsterdam in the Netherlands, where it is probably just as rainy as in Seattle, Washington. Dave Keller is on a short break, most likely thinking about the markets, but hopefully also spending some time with his family. I believe they all went to Disneyland. So, Dave, when you're listening, have a good time. Spoiler alert, you're stuck with me for also tomorrow and Friday during the Final Bar. Thank you for joining us every weekday after the market close, and we try to make sense of everything that happened. Price action across various asset classes using the technical toolkit provided by StockCharts.com. The StockCharts platform is providing us the tools for anyone who likes to look at charts, anything related to charts, indicators, breadth measures, momentum, whatever you can find, and of course, relative rotation graphs, of which I know that Dave actually uses them on a regular basis here on the show in the Final Bar. We have another great guest today here on the show, Bob Lang, president of Explosive Options. But first, let's do our market recap and see what happened before, during, and after that announcement of a 25 basis point rate hike. I was kind of surprised. I was talking to Bob before the show, and all of a sudden, the market was about 1.5% lower. That happened in a jiffy, because when I started looking at the markets today, obviously I'm in Europe, so European markets quite slow in anticipation of the Fed decision. Then US markets opened. That also didn't do much. You can look at the Dow here. It's meandered a little bit about yesterday's close. And during or at the moment of the announcements, the market jumped up. People seemed to like it. And then all of a sudden, like around 3 o'clock, like the last hour, we got this sell-off, which brought us about 1.6% lower across the board. It's quite interesting how that happened. Looks as if small and mid caps got hit a little bit harder than the large caps. And the VIX obviously jumped. I'm not going to talk about the VIX right now, because we have a great guest who knows everything about the VIX and is going to explain a little bit more about it to me. I'm also going to use my market overview instead of the standard one on the dashboard, because when I started doing the Final Bar, I created this layout which basically mimics the lines on the dashboard, but I just like that grid with all these indexes, and these are all 30-minute bars. So it gives me a great view of what happened during the day, during the trading day in relationship to the few days before. And the nice thing is that I can actually blow them up. You take this toggle here, you can actually look at the trading action during the day. And look, this is what I'm talking about. This is what, this is today. It started here, a little bit up, a little bit down, and then butt hike, just everybody hunky-dory like it, and then all of a sudden, so maybe there's some news message came out, I don't know, maybe I missed it, or this is simply, a market being sold, which is quite interesting right now. So that is something that we have to deal with. If I take it back a little bit more history, then we're back at the levels of the 1st of March, started at the beginning of the month. So we'll have to look into this, what it means for the rest of the market, for the broader markets here. The rest of the market, so the Dow is showing a similar image. All these stock markets, all these indexes will probably show you a similar pattern. Let's look at the small cap, because those were hit a lot harder, I saw on the dashboard. Yep, and here you can see how that's going. You can also eyeball that. This is a much weaker chart than we had for the S&P 500. There, you know, the S&P was back to March 1st. That's around here, and the small caps here, the S&P 600, is way below that. So that is not a very good sign, I'm afraid. Let's go to the broader market here. That's the New York Stock Exchange Composite Index. Same gigantic sell-off bar at the end, but here also in line with the S&P 500, back to the levels of the 13th, pretty much in line. And what do we have here? Canada did respond a little bit, but not much. And obviously, who cares? It's Canada, and they don't care about what the Fed's doing, or are they? I don't know, but they're holding up a lot better than the U.S. markets as far as I can see. They actually closed this morning's gap, so there should be a little bit of support here around that 19,500 area for our friends in Canada. The VIX, I said we were talking about that later on, and then the bond market. So here's TLT actually rallying and pushing yields lower. So that is an interesting dispersion between stocks and bonds at the moment. Markets are interpreting apparently this rate hike a lot more negative. Now, what happened with our sectors? And not too long ago, StockCharts introduced relative rotation graphs for intraday data. So what I did here is I brought up an RRG for 30-minute bars. So, and then I selected 13 periods. So that's exactly one trading day, 6.5 hours. So here, these tails show you exactly what happened during the trading day from a relative perspective. And if you want to look at how sectors are trading during the day, I suggest that you bring up an intraday RRG every now and then, because it gives you a great view, a great overview of what's happening across sectors. And you can see here, so this is the performance, the percentage performance over the 13 periods. So during the day, consumer staples actually lost about 90 basis points. Tech won, but on the other side, we've got financials and real estate that came down 2.3 and 3.6%. So that's a dispersion between the best and the worst sector of about 2.9, about almost 3%. That's a tradable move, I would say. Obviously, defensive sectors, staples and healthcare at the top of the list. Utilities not so much, but surprisingly enough, and that's something that we've seen developing over the last few weeks more and more, that technology seems to be back as a safe haven. I've talked about that in the final bar a few times already. Technology seems to be doing really, really well. On this intraday RRG, you can see that it drove the market, it led the market during the first half of the day, and then it started to roll over during that sell-off. But in the end of the day, it's still down only 1%, while the S&P is down 1.7. So we've got three sectors that are outperforming. We bring that back. I can also bring that on one of these nice grids on StockCharts ACP, the advanced charting platform. And let me bring up that XLK chart here. And you can see how that sold off, but it's really still well above that 142 area where we seem to have a little bit of support. So tomorrow, when the market opens, it's going to be interesting to see whether that 142 level will be able to hold for XLK. We look at the stronger sectors today. So that was staples and healthcare. And then we've got staples right here, also sold off, down about 1%. And you see that it's breaking that support level here. This was intraday support from yesterday. That has been broken. So a lot of negative signals on these intraday charts, I'm afraid. It's going to be very interesting to see how the rest of this week is going to develop. And lucky me, I am here to talk about that with you. Let's quickly see, before we wrap up the segment, what other sectors have been doing. Financials, obviously super interesting. I'm pretty sure that all of you have picked up what happened over the weekend here in Europe with Credit Suisse and UBS. That was a real big thing. That was history in the making. So far, Mark's been dealing with that pretty well. I believe that UBS share price from its low Monday morning, it opened Monday morning about 10% lower, and I think that we're now about 20% higher from that low. So that's really a move that took people by surprise. Here is the financial XLF, the Financial Select Spider Fund, also coming down hard, closed the gap, and we are looking for support in the 30 area tomorrow for XLF, that is. Ladies and gentlemen, we're going to wrap this segment up here. This was our market recap. We're going for a quick commercial break, and after that, we're going to talk to Bob Lang of Explosive Options. Welcome back, everyone. Thank you for staying. Once again, I'm Julius de Kempenaer, broadcasting to you live from Amsterdam in the Netherlands. In our next segment, we'll be speaking with Bob Lang, president of Explosive Options, and I cannot wait to hear what he has to tell us and what his take is on today's markets following the Fed announcement and the volatility in the market. But first, we like to encourage you to send your questions so you can be answered, your questions for the mailbag, so we can answer them live on air. Our email is thefinalbar@stockcharts.com, or you can tweet us at finalbarsctv. Or you can put a comment below the video if you are watching on our YouTube channel. The rest of the week, tomorrow, I'll be interviewing Adrian Zdunchik. I've studied so hard on that name. Adrian is a fantastic person. I met him, well, I haven't even personally met him, but virtually, and we got along great. So I'm really looking forward to talking with Adrian as well. Adrian is the founder and CEO of the Burp Nest, and on Friday, March the 24th, I'll be answering your questions in the Final Bar mailbag. Remember the ones that you're sending to that email address that I just gave you. Now let me introduce our guest for today, Bob Lang. Bob is the president of Explosive Options. He has been on the show before with Dave Keller, but he is my first opportunity getting to chat with him here on the Final Bar and pick his brain. And as a matter of fact, he is my first ever guest here on the Final Bar. I've been doing this show a few times, but I never had the honor of welcoming a guest to the show. So Bob, welcome, and nice to virtually e-mate you.
Thank you, Julius. It's great. It's a great honor to be on with you. It's great to be the first guest that you've interviewed as well, too. As I told you earlier, I'm a big fan of yours. I read a lot of your material, and it's just so valuable. It's so good. I hope everybody on watching on StockCharts TV has a chance to take a look at what you're doing, and hopefully maybe what I'm doing as well too. But I appreciate the chance to get on and talk with you today.
It's totally my pleasure, Bob. And so, I mean, you picked a great day to come on the show. I mean, it looked as if it's going to be a very boring day, but even like an hour after the Fed, it was still pretty boring. But then all of a sudden, we got this sell-off down. So what is your take on that, and which chart do you want me to bring up?
Well, it's never boring when it comes to Fed Day, Julius. It's always a lot of uncertainty going on, and what we've noticed over the past couple of days, and actually a couple of weeks since we had this problem with the Silicon Valley Bank, and then subsequently a couple of other banks failed. People have put in their minds this notion that the Fed was going to come in and support the markets with some sort of a dovish statement or dovish attitude. Again, remember something. We're talking about apples and oranges here. What happened when the financial situation with the banking has nothing to do with inflation. Two different things, two different baskets. However, a lot of people out there tried to make this connection that they are related. And since obviously the Fed has some direction over banking, much like the Treasury as well too, and then of course the Fed is controlling interest rates on the short end of the curve, they figured that there was some sort of a mesh there that we could make some sort of anticipation that the Fed is going to lighten up or be quite more dovish coming into this meeting today. And again, we always have to wait and hear what they have to say. I learned a long time ago, Julius, don't anticipate, react to what is actually happening. Whenever I anticipate, it's always wrong. Listen, as just like anybody else, nobody's Nostradamus. Nobody can see the future. It's a 50-50 flip of a coin if you're going to get it right or get it wrong. And as you so correctly mentioned right after the Fed announcement, Julius, is that we did see markets rising sharply, coming back down, rising back up again, and finishing on their lows of the day. I want to say we had about 100 handle move on the S&P 500 from top to bottom today. It's quite a move. That's over 2.5% move from top to bottom. But as we'll talk about volatility, listen, the volatility index is still elevated and it's still portraying the fact that we can get these big giant moves. So it should not come as a surprise that we had that today.
No, it looks as if the announcement was there, and that was what everybody expected. And maybe I haven't heard the press conference or read anything about it because I was preparing for the show, but probably something was said during that press conference, during that announcement that took the market by surprise, and why it was sold off.
Well, I can tell you what it was, and I was listening to it. The S&P futures were up about 30 handles, Julius, at the time that there was a question out from the audience asking about, well, do you see, or do you agree with the committee when they said that you see interest rates on the Fed funds at 5.1% by the end of the year? And he said, and the question was basically, well, the market is looking at rate cuts sometime before the end of the year. Are they wrong or not? And so Powell basically threw cold water over that and said, no, we don't see any rate cuts coming. And that was the point in time where the market started nosedive. Yeah, we lost about 35 handles there, Julius. Bounced back a little bit, and then it was just Katie barred the door right at the end of that.
Hey, what chart do you want me to bring up? You got 3 great charts. So which one do you want to start with?
Well, let's start with that stocks above their 50-day moving average. That's the first one. I reference this one a lot in my room on my show during the day on Twitter. I do daily bites twice a week, and I talk about this chart a lot because it's so important to talk about the S&P 500 stocks. Now that's a broad index. It's not the Dow 30. It's not the Russell 2000, but it's still a good broad cross section of companies across the United States. So it's 500 companies, the S&P 500. And how I look at this, Julius, is that the amount of companies that are above their 50-day moving average or below it. So as you can see now, as of today, or actually of the 21st, you can see there was 32%, 32.6 or 32, basically 1/3 of all the companies in the S&P 500 that were above their 50-day moving average. So you flip that around, subtract 1 from that, and you say that, well, that means 2/3 or 67% of the S&P 500 is below their 50-day moving average. And I look at the 50-day moving average, Julius. I'm not sure if you do this as well too. If you're below the 50-day moving average, I'm sorry, you're in a bear market. Period. That's you're suffering in a bear market right now. The S&P 500 last year spent the majority of 2022 below the 50-day moving average, and it's still struggling with that 50-day moving average today in 2023. So this is the chart that really tells the story a lot. I know we've had a good rally for the past couple of days, Monday and Tuesday, and then but we're only 2 weeks removed from a 4% down week on the S&P 500. So and then of course now today brought us back down under 4,000 after we had closed above it for just by a couple points yesterday.
Yeah, so I'm totally with you, and what it also probably tells, because this is unweighted, and the S&P itself is weighted, of course, and we've seen a couple of mega cap stocks doing really, really well, basically keeping that S&P up. But yeah, you're right. I mean, the majority of the stocks below the 50-day moving average. I'm gonna paraphrase that. I think Dave used that a few times. Nothing good happens below the 200-day moving average. I think we can say that nothing good happens below the 50-day moving average. So
that's true. That's true.
Let's move on to the next chart. So do you want to go to the VVIX or the high lows first?
Yeah, let's look at the VVIX for a moment here. So this is an interesting chart. So not many people really know what this is. They're familiar with the VIX, the volatility index.
Guilty. Tell me, what is this?
So this is basically a derivative, Julius, of the volatility index. So basically, it's telling us how much volatility is being priced in into the markets here, right? And it's a volatility of volatility. So it's the second derivative of volatility here. And what is it telling us? It's telling us when things are starting to kick in and people are starting to buy protection and get nervous. Now, doesn't the VIX tell us the same thing? Well, sure it does. But this is a derivative, and it actually gets in there and gives us signals much earlier. And as you can see, when that the VIVIX started to rise in the beginning of March, was actually the Thursday before that all that news went down on Silicon Valley Bank. So just, yeah, right there. So we saw a big rise in the VIVIX in front of that. Now, that was a rather benign day. I think we were down a little bit or up a little bit. I can't remember, but there's no real news that was driving the markets. But why all of a sudden did we see the VIVIX climbing that day? Well, I think there's some people who are behind the scenes. Listen, I'm not a conspiracy theorist, but there's some people know things, right? We know that.
They always do.
People know things. So there was a lot of action in terms of the VIVIX, and people were buying protection, buying volatility. And of course, when that news hit with Silicon Valley Bank and then Signature Bank and a couple of other names, First Republic, a lot of people were all of a sudden saying, "Oh my gosh, this could be a contagion. This could be a bad thing. I better go out and buy some protection." And we saw the VIVIX signaling to the VIX that it was going to go up. And we did see a rise in the VIX via the volatility index up near 31% a little over a week ago. So that was a huge move in volatility. We were at about 18-19% just before then. Just humming right along. The markets looked like they were going to be turning in the bulls' favor, but certainly not according to this indicator.
Super interesting. I need to start studying this a little bit more. This is my bonus. This is my takeaway for today. This is something new that I learned. Let's quickly move to your last chart, the new highs, new lows index.
Sounds good. All right. So this is another one, much like that first chart that we discussed, that I like to talk about a lot. So breadth is so important, right? And this is the ultimate breadth indicator. It's a long-term indicator for me. But as you can see, going back to the beginning of 2022, we drew that dotted line in there. We can see that since the beginning of 2022, the new lows were crushing new highs for the better part of a year. And it was only recently at the start of 2022 where that changed, that shifted a little bit. But now we're back below that dotted line again, right? Way over to the right. And that is going to cause the markets to struggle again. Are we going to come down to see levels like we did back in September and June? We were at minus four figures, minus 1,100 to 1,200. I don't know. We could, right? I mean, if people start selling and start realizing that markets are in trouble here with higher interest rates and slowing down in the economy. Listen, today the Fed came out and I thought they were going to upgrade the economy because the first quarter is looking pretty strong. They actually downgraded the economy for 2023. So they're looking for a very, very poor performance in 2023 for GDP. So I think this is certainly a very important indicator to watch going forward.
Yeah, thank you so much, Bob. We're already out of time. I'd like to thank you for coming on the show, and I really hope that we'll meet again, maybe here on the show, maybe somewhere in real life at some event. Thank you so much for being here with me today. I'm looking forward to seeing you again.
Great to be with you, Julius. Thank you again for having me, and we'll definitely see each other down the road.
Totally my pleasure. All right, so we are coming towards the end of the show, and that means that I need to do my 3 in 3 for today. And the first chart that I thought of bringing up is IEF. That's the 7 to 10 year Treasury bond ETF. And I think that's an interesting one because it's pushing against that 100 level. That's going to be a really important level for IEF. If we break that, and if I look at the fact that we recently put in that higher low here, which means that buyers are coming back earlier, they're a little bit more aggressive, and they're facing selling pressure around 100. Which was a support level back in 2018. It acted as support again somewhere in the mid of 2022, broke it, and now we've kind of tested it a few times, and now we're pushing against it. If this is the final move, if we're going to break it, then the next target, in my opinion, is around 105. And that means that we will see lower yields in that segment of the yield curve, the 7 to 10 year segment. How that's going to play out with all that's happening to the stock market right now, I don't know, but it's going to be important and we'll have to watch it. The second chart that is for my 3 and 3 is gold. And I had to think of ChartCon 2022 in October, when we were doing the opposite bulls and bears about the same chart. One person was doing a bullish version of a chart, and the other person had to come up with bearish arguments for that chart. And it was right here. Let me put that crosshair in here. And gold had just broken below that 157 area. And lucky me, I was the one that should be bearish, that had to come up with a bearish story on gold. And I thought I killed it, I nailed it, because this was just breaking out. This was going to be the biggest down move in gold for a decade. Lo and behold, it turned out to become a very nice double bottom, out of which a really strong rally emerged. We touched that falling trend line, put in a very clear higher low, which was at the level of that previous peak, and we're now breaking that slightly falling trend line at upper boundary resistance. We're pushing against horizontal resistance around 185, 186. If this gives way, 192, 195 is around the corner, and be careful, that's the all-time high level. If we take that out, if gold goes above 195, there's no upside resistance anymore. That's uncharted territory for gold, and that's going to be very interesting. So I'm going to keep a closer eye on gold in the next couple of weeks. Good support around 180. If we can take out 185, it's 192, 195, and then away. That's for gold. Now, the last one is maybe the new gold, and that's Bitcoin, because Bitcoin is doing really well very recently. We had a very long downtrend. It looked as if it was going to go much, much further down, but we reversed here. It looks a little, now that I'm looking at it and talking about it, it actually looks a little bit like the move that we saw in gold, a serious breakdown and then a kind of double bottom breakout and coming back up. Initial rally back to 25,000. That was an important resistance level for Bitcoin for quite a long time. And then last week, we jumped above it. At first, we hesitated a little bit, a few days. We were going back and forth around that 25K level. But then we jumped, and we're now pushing against 28. And I've got this line here is around 28, but I think it's a range, it's an area for Bitcoin where we will see resistance around 30,000, between 28 and maybe 31,000. This peak here is around 32, or 31, 32. So this area around 30,000 is going to be very important. If that's going to be breaking to the upside, there's going to be much more upside available for Bitcoin in the weeks ahead. Will it be the safe haven that all the Bitcoin fanatics and all the crypto fanatics are believing it is? We will have to wait and see. Maybe it's the new gold. I don't know, but I love the chart here. It's looking very nice. Ladies and gentlemen, we have to wrap up the show. Thank you so much for watching. Thank you for staying with me. And I really hope that we will meet again tomorrow when we will see the first day after the night before. What's going to happen after Fed Day? We'll have to wait and see. I hope to see you again tomorrow at a new episode of The Final Bar. Thank you very much for watching.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.